Hello friends, welcome back to the third part of the adjustment entries. In my previous two videos, I discussed with you 6 adjustment entries. In today's session, we will learn about 2 more adjustment entries. One related to interest on capital and other related to interest on drawings. So let us start today's session. First, interest on capital. Now to understand this, first we will first understand what is capital. Capital is the amount which is invested by the owner of the business. So, amount which has been invested in a business by the owner of the business, we call it as capital. Now, who is the owner? It depends on the type of enterprise. So, if it is a sole proprietary concern, it is a sole proprietor who has contributed amount towards capital. If it is a partnership form of organization, then the owner are the partners who have contributed capital. Now, this amount which has been contributed as capital, they might be entitled to interest on it at certain particular agreed rate. So that amount which has remained invested in the business, on that they would be entitled to interest on capital. So we will be calculating on the amount which has been invested in the business and which remains invested in the business. From this we understand that here the firm or the whether it's a sole proprietorship firm or a partnership firm, it is the business which is going to pay the interest. So it is given by the business and it is given to the owner of the business. It is given to the owner of the business. So that is why we pass this particular entry. The entry is interest on capital account debit to capital account. Why do we debit the interest on capital? Because it is being given by the business. It is in the nature of an expense for the business. And therefore, when the expenses increases, we debit it. And because it is being given to the owner, the capital balance would increase. And capital accounts, when increases, we credit it. That is why this is the entry that we pass. Interest on capital account debit to capital account. Now, normally, interest on capital is calculated on the opening capital. So, on what do we calculate the interest on capital? It is on the opening capital. But however, there is a situation where during the year they might have introduced additional capital. So, we'll see examples to understand it, that how interest on capital will be calculated. So for better understanding, let us look at this first example where there is a proprietor Anil. He has invested 2 lakh rupees as capital on 1st April of 2020. Interest on capital is allowed at the rate of 8%. So let us first calculate the amount of interest which is entitled to. We are calculating on the opening capital of 2 lakh. 8% of 2 lakh rupees. That would amount to 16,000. So he is entitled to interest on capital of rupees 16,000. So now when we pass the entry, we would be debiting the interest on capital account debit in the books of the business rupees 16,000 to the Anil's capital account. If it is a proprietary concern, you just write capital account. So this is the entry. Being interest on capital allowed at the rate of 8% per annum. So this is very simple. Now we'll go further and understand another example. Example number 2. Amit invested rupees 2 lakh as capital on 1st April. So he also started business with 2 lakh rupees. He introduced additional capital of 1 lakh on 1st October 2020. So on 1st October 2020, he brought in more 1 lakh as capital. Now, interest on capital is allowed at the rate of 8% per annum. So now, from this we understand that at the beginning of the year, he had invested 2 lakh. So, he is entitled to interest at the rate of 8% on 2 lakh rupees, and it has remained invested from 1st April 2020 to the end of the year. Entire amount was there. So that is for entire 1 year time. So that would come to rupees 16,000. For the second part, he introduced additional capital on 1 lakh on 1st October. So on that, also he is entitled to 8%. But however, when was it invested? It was invested on 1st October. So he is entitled to interest on that 1 lakh rupees only from 1st October till 31st March for the period for which it remained invested in the business. That comes to 6 months. October, November, December, January, February, March. So 6 months. So let us calculate. It would come to 4,000. So the total amount of interest on capital which the proprietor Amit is entitled to is 20,000 for this year, and that would be credited to his capital account. So the entry would be interest on capital account debit 20,000 to capital account 20,000, being interest on capital allowed at the rate of 8% per annum. So this is related to interest on capital. I hope that is clear. Now let us move on and learn about interest on drawings. First, let us understand what is drawings. Drawings are withdrawals by the owner for personal use. So we are using the business entity concept here and differentiating the business and the owner who is invested in it. We are considering them as separate entity. So anything related to the proprietor for personal use, if he withdraws or uses the money of the business for his personal purposes, that will be treated as his drawing. And these drawings can be either in cash or it can be in kind. Means it can be also withdrawn in the form of goods. Now further, important point here is there are two types of drawings. One which is out of capital and the other one is out of profits. Now, important point that you have to remember is this interest on drawings which is allowed by the business, which is being charged actually, this interest on drawings is charged by the business out on the drawings which is out of profits, not out of capital. If it is out of capital, it would affect the capital and therefore it would affect the interest on capital computation. But this interest on drawings is charged by the business, collected from the owner of the business on the drawings which is out of the profits which is made. For further detailed understanding, you can watch my video which has where I've exclusively discussed about these two types of drawings, that is drawings out of capital and out of profit, which is in the 12th category. Now, let us understand how interest on drawings is charged. Now, whatever is the interest on drawings percentage that has been agreed upon, on that particular percentage on the drawings out of profits, it will be calculated on time basis on the basis of the type of drawing it is. And because it is charged by the firm, it is getting interest. It is in the nature of revenue. And therefore, when revenue increases, we credit that revenue. And that is why we have credited here to interest on drawings. And whereas it is being collected from the owner, and therefore it would go to reduce their capital. And therefore, when capital balance decreases, it has to be debited. Therefore, the entry would be capital account debit to interest on drawings account. So I hope with this, both the type of adjustment entries are clear. So if you like this video and if you found this video useful, please do like, share and subscribe to it. Thank you. Have a great day.